How many of you want to make a lot of money? Everybody who wants to make a lot of money, raise your hand. Everybody who wants to make a lot of money but just doesn't want to raise their hand, raise your hand. Okay, so rather than doing like some huge, long technical spiel about the market, which I did in my last presentation, and if I was going to go that route, I'd have to basically regurgitate the whole thing because my presentation in November was really a 2020 outlook. So but because I am a technical analyst, I am going to have a couple slides and talk about where the market is technically. But also, I'm going to talk a little bit about how to find 10 baggers and big winners. And you guys are here all day. You hear a lot of material, so I like to boil things down to a few bullet points that you can easily remember. The first thing is technically, from a larger view, big picture view, it looks like precious metals are in a bullish consolidation. So we're in some kind of a correction. We're still correcting and consolidating. But when you're in a bullish consolidation, that means eventually it's going to resolve to the upside. The market's going to trend higher. So starting off, this is a daily chart, daily candle chart of gold and silver with the 200-day moving average. And what we see is, so we had this, I mean, it was kind of a tiny blow off in gold, but this was a false new high. It wasn't confirmed by silver or the gold stocks. So we're still correcting and in a bullish consolidation that began at the beginning of September. Now that we have the 200-day right here, and this thick line, that's also the 38% retracement of this move. So there's a confluence of strong support right around there. What is that, 1450? So gold could come down. It could even test 1450 and be fine. I think there's a chance it could test 1475, maybe February or March, but that's just a guess. We'll have to see how it plays out. Silver, confluence of strong support is right around here, just at about 1650. So I think the sector, like the risk in the short term, or just say in the first quarter, the risk is we're going to see a test of the 200-day moving averages. But keep in mind, the 200-day moving averages, they are trending higher and they are moving higher. So if they could test these levels in a month or two, and they'll be a little bit higher than they are now. So let's talk about GDX and GDXJ. We're in this bullish consolidation. We've been in this pattern for almost 7 years now. We can look back. GDX 3132 is the key level. I put in a second line here because there is some resistance at 30 I kind of missed, like right here, then right there before the peak. And so there is some, it stopped just below 30, but 31, when we get a weekly close above 31 or a daily close above 32, that's going to be a breakout. I mean, that's what we're all waiting for. But again, we're correcting, but we're in a larger bullish consolidation. So I can't predict the future, but I think the first quarter is probably going to be sideways to down, breakout move at this point, probably could come in the second quarter, early third quarter. GDXJ is just as bullish, although from a long-term standpoint, it's not quite as close to breaking this as GDX is. But once GDX makes this big breakout, GDXJ will follow. And this is really my chart for the year. So, aside from the last chart, if there's one chart you want to really watch every day, it's the gold stocks against the stock market. We have this clear resistance line right here. This is where we are right now. And if you look at a historical index like the S&P TSX, which goes back to the 1920s, or the Barron's Gold Mining Index goes back to 1938, whatever gold stock index you're looking at, relative to the stock market, it has made a double bottom. And so this, based on gold stocks against the stock market, this double bottom, these are 90-year lows. So this is basically right here, this is the cheapest that gold stocks have ever been relative to the stock market. So if and when this ratio takes out this resistance, that's going to be hugely significant for the precious metal sector, especially for the gold stock. So I'm really, really keeping my eyes on this chart. That's the one you want to remember for this year. Okay, so let's talk about finding 10-baggers and big winners. And first, let's look at the life cycle of a junior company. Everybody knows this chart. This is from Brent Cook, and it just lays out everything really nicely. Concept, I mean, there's a lot of companies here that are concept or pre-discovery, probably some discovery as well. But what I like about this chart is there's really 2 times to buy. So if you're thinking about, because we know that timing is very important, where are the 2 times to buy? For me, when it comes to explorers, I want to try and buy like after they've made a discovery and there's huge growth potential. So just not quite at the bottom, but I think a little bit after, because there's some, you are de-risked a little bit. And then when you're looking at producers or just a single mine company, when does a producer start to outperform? The market starts to price in production. Usually, like it could be 6 months before, or 7 months, or 3 or 4 months, but basically a quarter or 2 before production. That's when the market starts to price it in. So we're basically looking at, this is where we want to buy. We want to buy here or we want to buy here. So that's important to keep in mind. So let's talk about junior producers, because I like investing in those and not just entirely explorers. But when it comes to junior producers and trying to figure out where they could go and what their upside potential is, there's basically 3 things to look at. There's 3 drivers. There's production growth, and then margin growth, which how much are they cash flowing per ounce, and then at a higher gold price, how much are their margins going to expand. For higher cost producers, they have more leverage, so they could get more growth there. And then there's the valuation increase. So those are the 3 things that to really keep in mind. I look at those and I'm projecting where the upside potential is for a producer. And I was doing some calculations, and if all 3 of these things go up 125%, then that is extremely close to getting a 10-bagger. But of course, you have to adjust for how much debt they have, how much, their share structure, how many financings they might do on the path to higher production. But this is really the formula that I use. And to boil it down to what's most important when you're looking at a producer, it's really production growth. And the market in any sector loves growth. We know that growth always gets a premium. So production growth is the most important. And when you get higher production growth, that can increase your valuation. So if you're not growing, but suddenly your growth outlook changes and it's much better, maybe because of exploration upside, that can also increase your valuation. So that's another reason why production growth is really important. And then exploration upside, we know that's helped some producers that have done really well over the last couple of years. So really, to boil it down, number 1, look for production growth. Then number 2, look for exploration upside, because as we know, the producers that have performed the best, it's been exploration upside. It's been exploration success. Here we have Kirkland Lake, Wesdome, and also K92 Mining. So these 3 companies, they've had exploration success that's really driven their really bullish outlook for the future. Kirkland Lake's kind of mature on its path. Wesdome is getting there. K92 is not quite where Wesdome is. Interestingly, K92, I didn't even notice this till I put this up, but right here it's breaking out of a very bullish cup and handle formation. But what's interesting about looking for exploration upside in producers is, there can be a lag. When these companies made discoveries, after the initial discovery, of course, there was time when they still grew the discoveries. But, for example, looking at Wesdome, you could have bought it around here. This was after they made the initial discovery. Same thing with K92. I think the initial discovery was here. You could have bought it around here. So that's another thing to look at when we're looking at producers. Obviously look for production growth, but also exploration upside, because exploration upside leads to production growth, which then can lead to a higher valuation. So, over the next couple years, if we're looking at producers, we want to try and find, which companies are going to be next. As I said, Wesdome, Kirkland Lake's kind of mature. Wesdome is, not close to Kirkland Lake. I mean, it still has some upside, but K92 is, that is a lot more upside than the other ones. Okay, so let's talk a little bit about junior explorers. So you have pre-discovery and post-discovery. I know there's a lot of pre-discovery companies here, also post-discovery. So things that we really want to look for in post-discovery, that's after a discovery has been made. I think the most important is really the growth potential of the discovery. That's something I like looking for. A company has already made a discovery or they have some resource that's defined. That way, as a speculator, that gives you a backstop. There's some value that's already there that gives you a backstop or some support. So it's not just an all or nothing situation. So the growth potential of the discovery, that's really what's most important. And also, I would say you have to look at it and can it become a mine? The discoveries that have a lot of growth potential that can become a mine, those are the ones that obviously they're going to trade at a better valuation. The market is going to assign more value to those. I mean, because if you ever notice, well, how come this company is worth so much less than this company? They have the same resource, et cetera. It's because one probably can become a mine and one has more challenges. So those are really the two things I would look at. Obviously, the other things like share structure, I mean, that's important. Is the company, are they raising money at the right time or not? That can affect the upside potential. And then also looking at, do they have industry or institutional sponsorship? That also helps. But really, just to go back for a second, the most important are, I would say, the growth potential of the discovery and can it become a mine? So those are the two most important things for me. And these are some examples, Great Bear and Silvercrest. And again, like you don't always have to, I mean, you can wait and buy in after the initial discovery. Silvercrest, you could have bought that just a little bit above $1 here. And I mean, that's on its way to being a 10-bagger. I mean, Great Bear has been a 10-bagger. I mean, you could have bought all around here and it's been a 10-bagger. So, and people feel it has more upside potential. So you don't always have to buy in immediately when the discovery is made. I would say, look for companies that have made discoveries that have upside potential, but for whatever reason, the stock's consolidating. Maybe they raised a lot of money at a certain point. There's more shares hitting the market. So those are things to think about and remember. You don't always have to buy in initially when the discovery is made, because as we see, along the way, there's other opportunities to buy in. And let's talk about pre-discovery, because I started a podcast, the 10-Bagger podcast, and a lot of my guests have talked about looking at these micro caps, these real nano caps, and there's probably a few of those here. And so I've made a list based on what a lot of the guests have said, and it's really like when you're looking at nano caps and pre-discovery, the things that are most important, obviously management, but insider ownership has to be high. I mean, that's just the thing we have to keep in mind. The smaller the company, the more important management is, but the more important insider ownership is. Because look, if a tiny company, if they don't have that much insider ownership, then management, they're not aligned with you. They don't have that much on the line. But if they have high insider ownership, that means they believe in it. They're aligned with you. They want to make it a success because their money's on the line. And so in addition to that, the share structure is obviously very important. But in addition to share structure, it's the warrants. You obviously want no warrants or a limited amount of warrants. And as far as who owns the stock, I mean, is it tightly held in a small group, or are there lots of different people who own it, who might sell when it starts to go up. So those things factor into share structure, and all that's important because obviously we know the tighter it is and the more strongly held that it is, then when it has some good news or really good news, the stock could really make a huge move higher versus if its share structure was not quite as ideal, that's going to limit the upside. So when we're looking at pre-discovery, those are the things to keep in mind. Management, insider ownership, what's the share structure look at? And you need a lot of patience. You have to let it play out if you're involved in these things. You have to hold it for, at sometimes, a couple years. So you have to have patience. And the other thing, and I mean, this really goes for everything, like become an expert. Like, talk to these companies, build a relationship with management. You guys are all here at the conference. You can talk to these companies. You can, most of you probably live around here. I mean, you can visit them. You can follow up with them. So you can become an expert in these things, and you can gain an advantage that way by learning all these things that the market doesn't know about. So, that's also true if you're investing in, larger, more established juniors. Your access to management might not quite be as high, but it's still going to be good. So don't just take anyone's word for it. I mean, you want to become an expert, get to know these companies, become an expert on what you're investing in. So again, I like to sum things up because you're going to hear lots of presentations, and I just want to boil things down so you can remember the most important things. So first, in the sector, we were correcting, but it appears to be a bullish consolidation. So the first quarter for precious metals looks to be sideways to down with that huge breakout. It looks like it's probably coming. My guess would be, around the middle of the year, but could be a little before, could be a little bit after. But just temper your expectations a little bit for the time being. Very short term, it looks like we're going to correct more. So moving on to producers, focus on growth and exploration. I talked about how higher growth in a producer, that leads to a higher multiple. So you get a more bang for your buck there. But also, as I showed, exploration success, that's what's facilitating for the leading stocks. That's facilitating production growth, which then in turn gives you the higher valuation. So that's something to keep in mind. Look for producers. If they don't have growth potential, try and find the ones that are having exploration success that can change their production growth outlook, because as we've seen, those companies have been the real winners the last couple of years. And then when we're looking at explorers, obviously management, management, that's a lot. The smaller the company, the more they have to be invested. Share structure, because that's going to tell you, not tell you, but that's going to give you a sense of, if there's good news, how much can the stock rise? And then also growth potential of what they're working on. I personally like to get into things that they already have some kind of a backstop. They've made a little discovery, or they have a little bit of a resource. But then they have lots of upside potential as far as increasing what they already have. So that pretty much sums it up. I thank you all for attending. If you want some picks from me, I don't have any companies here, so you'll have to subscribe to my letter. You can go to thedailygold.com/premium. And looks like we're right on time, Matt. And that's going to be all for me. My friend Brian London is up next. And I just want to give a shout out to him and his LSU Tigers, who won the national championship. So congratulations, Brian.